This proposition that's coming through is that the balancing act that the Fed faces, which is a tightening, a rising in the T-bill rate as we've seen, versus reducing the balance sheet, that they could be forced to stop. Do you agree with that hypothesis?
Yeah, look, whether it's the managing the balance sheet or whether it's managing other parts of financial condition, at least to the extent that the Fed can control it, we would certainly agree that there is likely to be a debate in financial markets in coming months. Look, when you look at Q2 GDP 4.1, it certainly does feel, because of the makeup of the GDP that we saw in the second quarter, it continues through into the third quarter. But what our sense is, as we move through the end of this year and into next year, remembering, of course, that it's likely that the Fed will raise rates both in September and December. We expect a further move in March and June. That would take Fed funds up to 2 7/8, which is absolutely in real positive territory. So we're absolutely at the point where monetary policy and financial conditions will be tightening. By then, we will continue to see the Fed's balance sheet continue to wane and likely a stronger US dollar. So that mix of monetary policy and the mix of financial conditions that we're seeing imposed on the US economy certainly is going to be in a tightening camp. Remember as well that we have a trade dispute ongoing in the background, and certainly we are seeing some signs, particularly in non-oil investment, of softening there. So as the positive impact of fiscal policy wanes through this year, as we start to see businesses pulling back from investment as well, we actually think that when the Fed finishes or gets to the hike in June, it's at that point that we'll see a pause from a monetary policy point of view. That's where we see developments from a Fed perspective.
Rob, let me jump in, because you mentioned some of the trade tensions, and you look at what's happening globally. If anything, it's escalating. You're a believer that this is going to feed into a stronger dollar. This is greenback positive. What kind of strength are we talking about here? Because it's really a cascade of events that might lead to some form of super rally, because you've got the Fed hiking and the US dollar acting as a safe haven.
Yeah, look, and I think that is a risk. Again, when we look at that mix of risk events that we've got, particularly through September, Fed hike, we're looking more carefully at the Italian budget. That's going to be becoming more of an issue late September, early October. I genuinely do think late September, early October, we will see further iterations of the Section 301 tariffs from the US, and potentially retaliatory action as well from China. You put that mix together, and my sense is that it continues to boost the US dollar. With that in mind, I wouldn't be surprised to see DXY pushing up to 98, potentially the 100 level, and that certainly argues that we should see further weakness in euro, and a move down to potentially 110 for euro is possible in that mix of risk events. Beyond that, though, I'm not a big believer. As we start to move through the end of this year, as US economic momentum starts to slow, I think markets will be increasingly talking about the end of the Fed cycle, and we're much more optimistic on the outlook for euro next year as growth starts to improve given the weaker currency.